Hi there, everyone. Todd and Tony here. Welcome to the Wednesday webinar. I'm Todd Gordon of tradinganalysis.com. With me every Wednesday is Tony Lindsay at MotiveWave. Tony, what's shaking?
Not too much, same as usual. We did launch a 4.220 last week. We're probably going to put out a 4.221 soon too. There were a few, I guess, regressions, just changes for version 5 that had an impact on version 4.
Okay.
So we're going to be testing those and making sure it's all working good, and we'll launch that probably in a few days.
Awesome. What I was wondering about is when it was like 80 degrees here in New York, how warm did it get in Toronto? Was it close? Like a couple days ago this weekend?
It was pretty nice on Sunday. Yeah, it was really nice.
I was thinking.
I think it was like 20 or something like that.
So
that's 20.
I was going to say, so that's below freezing.
20 Celsius. So I guess that's about 70 degrees.
Awesome. Cool. Yep, I got the new version. In fact, we're on 420 right now, the version, and I know some of the jokes people are thinking about right now. Version 4.2.20, that is the latest, right?
Yeah.
Perfect. All right, good. Well, everything's working well over here, and jump in if if you want to add anything at all, okay?
Okay.
All right. Awesome. That's Tony from MotiveWave, and he's the guy who put MotiveWave software together, which is what we use to do our this crazy voodoo analysis that we do, which is Elliott and Fib and Intermarket analysis. So we're going to have some fun with that today. That's all right. We are recording. Let me get the questions up. Questions are now rolling. Good morning. Netflix on the run. All right, Milos, we'll take a look at that. Also, guys, a little heads up. Hello, Master Todd. That's funny. I've been having some funky sound issues. So if I go quiet, just type in very quickly, and I'll reset it. So just heads up there. It's there's a ghost in the machine, and long story, but I'm actually, and Tony's going to laugh at me, but I'm starting to piece together an Apple trading setup. I'm going to be one of the first guys with an Apple setup, try to put 4 curved monitors on top of a Mac Pro, and I'm trying to go full Apple. So we'll see how that goes. I'm sure Tony is saying, oh my God. Diane says, good morning, Todd. You're wonderful. Keep doing the voodoo. That's very sweet. All right. Netflix, we'll take a look at it. Norman says, bearish bets on options action. Bearish bets on gold miners 15 hours ago. Good morning. How about yesterday, bearish gold miners? Mike Coe. So I actually just did a video about 15 minutes ago for CNBC. I did it out of my studio here. And I was on CNBC yesterday. I'm bullish on gold, and that's one of the trades we're going to talk about. So interesting, Norman, that my buddy Mike Coe from Options Action said there was bearish bets on the gold miners. Okay. Good morning, guys. Thanks for offering this webinar. Fun stuff. Awesome, Sean. Perfect. Hey, Michelle. Okay, cool. So a few things to talk about. I don't have a ton, to be honest with you here, straightforward. This is a market where I'm kind of just feeling my way through. I don't have a strong opinion on this market. I'm just trying to focus on good trading setups. I was long the markets with our research customers. We took some profits yesterday, beginning to nibble on the short side, but I'm really kind of I have commitment issues in here. So I just want you to know that I'm going to be a little wishy-washy today because I think that's the kind of market we're in. I don't want to have a strong opinion. I'm just feeling my way through here, taking some setups and just seeing what works. So just want to put that disclaimer out there. That's just kind of the market we're in right now. No, Dwayne, I think gold is bid. So I'll get there pretty quickly. I have a long gold position on now. So where are we in the S&P? I mean, this has been, a one-way rocket ship up. And here's the S&P on the daily. And this is the predominant count that I'm tracking. I think we're in a big old wave 3 that topped out in July of 2015. So we're coming up on a year of highly volatile back and forth, no price change at all. We're pretty much where we were when the market topped out in July. So that's fine. Yeah, I appreciate that. Truly respect that honesty. Markets are wishy-washy now. You know, as a trader, not to get in a big aside, but you got to really not have an opinion as a trader. A trader is your job is to identify good setups. You know, if you like say this is the way the market's going and that's it, you're an analyst and you're going to get run over fast. So, you know, a good trader actually isn't a good salesman because he's like, well, it could do this and it could do this. People want to know certainty. That's just not really the way trading goes. So, kind of a fun dichotomy that I have to live. But anyways, so here's the longer term count. So I think a big old wave 3 was in place. And just to give you the perspective, let me go out to the weekly. Second wave was the European crisis as well as the U.S. debt downgrade here, 2011. This monstrosity of a rally was wave 3. And now I think we're in this big old choppy wave 4. So basically, you know, we're in the crazy zone here in this zone. We are starting to press the highs. I am, you know, I've been long. I've pieced out of the longs. I'll show you why, but I have no problem getting back in on the long side. I do think the S&P could move a little higher here, but eventually I do think we're going to be in for some more fourth wave sideways madness. So if you like the volatility in here, good, because I think it's going to continue to happen. I don't think we're going to have a low volatility, you know, slug to new highs like we had in 13 and 14. So daily is here. The reason I'm piecing out of long positions with our research customers and our trade alert customers is here's the daily. Number one, oh shoot, didn't mean to do that. Here we go. Number one, we are testing trendline resistance. We did close above it, but you know, I have no problem if we do a push above and then a snap back below trendline resistance. So trendline resistance, number one. Number two, we have a pretty funky little 5-wave move up into resistance. Okay. If I show you one smaller degree, let's get to the internals of this third wave here. It's going to look a little crazy, and there's a lot of stuff on my chart, so I apologize. But there's one, there's two, and then the wave 3 is kind of interesting. I have black 1 of red 3, black 2 of red 3, black 3, black 4, and then kind of an extended 5th. Then we go down in 4, and then we go up in 5. And I know there's a lot of stuff on this chart. I've been working this guy hard. So, you know, if we come up into the wave 5, you know, let's find some probable zones of resistance for the wave 5. So MotiveWave makes it real nice for us. Ratio analysis, 5 versus 1 plus 3. I'm going to do these top 4 wave 5 Fibonacci projections. Okay, and we're going to look for clustering to find out where potential top is in wave 5. So let's do the first one. Then you got to right click, pin it. Let's do the next one. Right click, pin it. Let's keep going down the list. And you're just looking for the clustering. That's all. Pin it. 5 versus 4. Okay. So, you know, what do you make of all this stuff? All right. Let's get inside of this and start to see where the kind of the congregation of these fib levels are to create an FRZ, which is a fib resistance zone. And this is a little subjective. You're looking for the clustering. And for me, I see a pretty wide zone from here, which is 2084, up to 2122. So let me just drop a square on there to kind of cordon him off. Show fill. So I have one zone right there. And let me make it prettier than that. That looks pretty depressing. Let's go orange and fill color, fluorescent, save default. Okay, so that's my first FRZ. Okay, so we'll call that, and I'm just doing my research for my customers, so I hope you don't mind this, FRZ from 2084 to 2116. Okay, so that's the first objective, fib resistance zone in wave 5 right there. That's why I'm starting to piece out of longs and starting to move into the short side because we are into the zone. I don't have any kind of reversal yet. There's another setup I want to talk about in Amazon, a big old outside bar reversal in Amazon yesterday. Technology has been weak. So we're starting to see tech kind of fail. So we're starting to see some signs that this zone might come to life. Let me get this time out of the way. Okay. The next zone, which doesn't look as kind of densely populated, but there's another one up here. And let me just do this. FRZ number 1. Copy, paste. And then FRZ number 2. And that one's going to range from $21.34.43 to $21.69. So that's the next upside zone. Do I know which one's going to hold? No, I don't. I really don't. Okay. But either one, I think there's a pretty good chance. I'll put it right in the middle. There's a pretty good chance either we're going to hold this one and drop, or we're going to hold this one and drop. Okay. Is it guaranteed to happen? No. But I think the probabilities are pretty high such that, you know, I'm beginning to piece out of the longs, and we took some profits yesterday, and I'm starting to nibble on the short side, putting some half positions on and stuff like that. And if we start to get the reversal, I'll add to the position for the B wave ride down. It's just a B wave ride down, and then eventually I do think we'll regain our footing and rally into May, and then we're into the sell in May and go away kind of setup. So that's where I'm looking at in the S&P. All right. Sorry, ignoring questions, but let me go back. Was it last week? A couple of guys had an option trade that goes against them. Market doesn't obey anyone. You know, it's funny. I have a mentor of mine who's a good friend of mine. He lives in the next town over. He was the head technical analyst at JP Morgan for 12 years. He was like JP Morgan Investment Bank. He's the head guy. And then he was at Morgan for another 10 years. He's a big Elliott Wave guy. He was the global head of technical analysis at those two major investment banks. He sent me a text yesterday from his boat in Naples. And he's like, in this kind of market, Todd, bulls and bears alike are getting mauled. It's a pretty tricky market. The big macro guys are getting just slapped around. So it's kind of funny when people say to me, like, oh, the big guys, the hedge funds, they know what we're doing. They're fading us. They're making money off us. BS. They're getting slapped around. It's a tough environment. So if you're kind of holding your own and making some money in here, you're doing well. So it's just funny. Yes. Point of that, Bill, is people, trades are going to go against you, man. This is a boxing match in here. It's all it is. Steve, what do you think, SPX count, what do you think the Feb low is a circle W? Okay, why do you think Feb low is a circle W, not wave 4? Okay, great question. And why is this move A and not X? Okay, good question. We're going to get into some Elliott Wave stuff here. Steve is a research customer of mine. He's that's why he's asking spot on questions. Okay, hey, Steve is saying, why do I think this is not all of the correction and we're ready to move higher? The main reason I'm doing that is because of this time projection down here. Okay, wave 2 lasted this amount of time, and then we've had a long wave 3. Okay, this wave 3 right here. All right. This is the 4v3 time comparison. So the amount of time we've spent rallying in this monstrous wave 3 compared to how much time we've corrected in this wave 4, you'll notice we're not even at a 23%, which is the most shallow time and price Fibonacci retracement. More typical, again, of both price and time is the 38% of price and time. A time retracement of 38% of our awesome wave 3 rally, the QE bond buying rally that we saw, would bring us to December 2016, 38% in time. 38% in price is 1641. So it's this agreement of price and time, which is why I have wave 4 kind of hanging out down here. It's been very shallow in both price and time. If we were to label the wave 4 here and say we're going to new highs in wave 5. I do think we're going to wave 5 and new high, but we need to chop up more time on the clock and as well as in price before we can call this guy over. So that's why I think this is going to be a false break. Then we drop in something pretty significant, which will feel, you know, very alarming to those who aren't prepared. But if you look at how far we've come, you know, would a rally or would a sell-off down to there look at all out of place? You know, a move to 1640 and the S&P area, 1670, 1640, if you just kind of, you know, just look at where the S&P's gone, look at it logically, that doesn't look out of place or absurd or, you know, sensationalistic at all. I think it's entirely possible. So for those reasons, Steve, that's why I'm calling this a false break. And these are a couple upside projections that I just did for you. Once we start to get the false break, and if it happens and we drop, this is going to be spectacular. This is going to be a pretty sharp sell-off. But again, I'm just stressing, look at where we've come, and just being logical, that doesn't look out of place at all. Okay. Yeah, I saw that Intel news, 12,000 jobs laid off. That was interesting. I didn't read it, but I did see it. It looked like they did fine after earnings. I'll check them, but it looked like they're okay. Brett, commodity wave 5 is often extended. Yep, that's the truth. Great feedback here, guys. There's a lot of intelligent stuff being put in here. Length and depth of this big picture, is it possible a move off 2009 low is complete? Off the 2009 low as complete. Andy E, you probably put that text in before I made this little rant right here, but no, I do think the S&P eventually, once we do that wave 4 low, you know, the S&P should be able to move up towards 3,000, and then we have a serious issue to contend with, which is a completed 5-wave move, you know, up around this area, and then we got to see what happens. Awesome, Sean. Glad that was helpful. Perfect. If SPX breaks 2015, will it go wild without any resistance? Well, Mike, that's what I'm trying to say here. No, I think this is a false break. So if we break to new highs, I think it's a false break. So no, it won't go wild. That's my whole point of what I'm saying here is, you know, we might get up to 2200 area. And I would just simply do a 1272 extension of this move. And the 1272 is right here. I know it's kind of hidden. 2230 area would be the 1272 extension. So no, I think it's, if anything, it's very likely that we do a false break. Okay, so that's the S&P. Let's do this real quick. Let's go to gold. And I want to just put it in the context of the S&P. Let me do GLD. I do have a new trade on a GLD. And okay. Let me just show you this. I thought this was kind of cool. I just did this video for CNBC and I just kind of showed them that. Okay. So here's GLD. And I'm going to right click, add study, instrument overlay. I'm going to put the S&P over gold. And if we go like this, I'll make it red, thicken it up, and create. So gold and the S&P, it's kind of hard to see the relationship, I think, when you're looking at two markets that are inverse. And these guys, gold and the S&P, are trading more or less inverse on the longer scales. And let me shift to a weekly chart. All right. Just delete those moving averages. Moving averages get in the way anyways. All right, so that's the S&P and this is GLD. There's an inverse relationship, as you can see, but I think it makes it easier if you flip one on its head and compare apples to apples rather than apples to oranges when you do some intermarket analysis like this. Gold and the S&P are not a perfect, not perfect trading partners, but I just flipped S&P on its head up on the left scale. So as the red line goes down, you see the numbers getting bigger, which means S&P is rallying. What I'm seeing is kind of a loose correlation, inverse correlation, because again, S&P is upside down, but they generally trade in the same direction. There are times like here, where they do diverge from each other, but it usually presents trading opportunities. There's a big divergence going on right now in the S&P and gold. As the S&P is dropping, look, it's going from 205 to 210 to 215 to 220, in line with the false break scenario that I just laid out to you. there's a divergence as gold has maintained a pretty strong bid here. The GLD has maintained a pretty strong bid as the S&P has broken to new highs. This is a divergence that, like here and here and here will be unwound. And I kind of think it's going to be gold higher and then this S&P chart starting to move this way based on that wave 5 analysis into new highs that I talked about. Okay, and again, I know it's confusing, but let me take gold and put him back on his feet rather than on his head. Okay, remember I did a 5-wave move up in the S&P, and I'm starting to think that the S&P will drop, and that will give gold a bid. So right now with the research customers, I have a, what is it, a 120, 122 call debit spread out in June. Just a short-term little play. We're handling that one. Here's trading analysis, members area, trade desk. These are all the open positions. We just put this trade on yesterday. So we have a GLD tier 3 full position, 120, 122 call debit spread. We paid 82 cents for it. Just a short-term trade to get this guy moving on the top side. Okay. Now, I don't like to do the pairs trade, John. You can, but with the pairs trade, you'd be shorting gold and buying the S&P, and that just doesn't make any sense to me. If the S&P is up against resistance and the gold market's acting strong, I'd rather be buying the stronger market that's kind of giving the leading signal. Find resistance in the S&P using your technicals, and then if you're right, you should have a pretty good move. I'm more of a directional trader like that, but certainly a lot of people would be trading the pairs. I think that's just kind of hiding from the direction a little bit. Dave, charting GDX. Yep, I'll take a look at GDX for you. McDonald's, wave 4, perfect. Okay. How are we doing for time? All right, 9:23. All right. So that's that. Here's what I'm looking at in gold. I'll give you the count in gold while we're there. It's kind of messy. It's actually very messy. All right. Let me just hide some stuff. All right, let's get rid of you. Oh, what did I do? All right, let's go down to a daily. That's kind of weird. All right, let me go back. All right, daily. Okay. So here's where we are. I think we're in a wave 4 pullback here. We identified the fib support zone that did hold the lows here. We were long gold for this little push, and we got out. It's pulled back. We've reestablished, and we're trying to get on board. I think the wave 4 is over, and we're set to move higher in wave 5, based on what I just said, where with the S&P and all that analysis I just went through. So this is kind of a mess in here. Implied volatility is pretty low in gold, so we did a long call spread, bought premium based on that low volatility environment. Okay, so that's gold. Russell, yeah, let's take a look at the Russell. I think that's going to be a good one. Okay. So the Russell is kind of the same thing. IWM, hope you don't mind me doing Russell, Michelle. I just have the Elliott Wave done in the IWM, if that's okay. Bob, I don't do a lot of the inverse stuff because we trade options. So, it doesn't trade in the inverse ETFs, doesn't really do anything for us. And I understand if you're if you're trading a retirement account and you can only be long the options or only long the stock. So you trade the inverse, but if you're trading options, you're going to get the leverage anyway. So just buy puts, right? And I always chart the underlying rather than the derivative because it's going to be a cleaner charting process. So, in fact, in the Fast Money producers just sent me an email. They want me to send this Russell chart. And in fact, I should just do it right now. I talked about Russell on air yesterday, and Fast Money wants to. Sorry. Let me just respond to her. Sorry, are you sure? In a webinar, but happy. Here, I'll do this live. Doesn't matter. But happy to send along because I'm doing it right now. Okay. So here's Russell, and I was talking about this. We broke the 200-day moving average, which is like somewhere in here. I'm not even looking at it, but we do have trendline resistance right here coming from the highs in the Russell. We do have a 5-wave move up completed, and a bunch of fib resistance in the zone, so it kind of matches up with what I'm saying in the S&P. So I don't think it's going to be an all-out meltdown, but certainly a good possibility to give 50% price retracement back down to like 1050 in the Russell. Okay, if you want to know the equivalent levels in IWM, I can just do a quick overlay for you. And create. Okay, the equivalent IWM on the left scale, pull back maybe towards $103.75, $104 in IWM from current levels of 114. So, am I positive this is going to happen? No. Am I saying go short? No. But I'm starting to nibble on the short side. And if I start to see confirmation begin to roll over, this is what we're going to be targeting. Could it be doing, Donji, could it be doing an expanding leading diagonal? From where? From what low? Top. I guess. Could it be doing a leading expanding diagonal? From the very, I don't really follow you, but sure. Either way, if it's a diagonal, if you're saying 1, 2, 3, 4, then the same thing. Wave 5 still drops. So it's doesn't matter. Either way, it goes lower, right? So if it's 1, 2, 3, 4, that means we're going to have a wave 5 to new lows anyway. So, right, that's a perfect example where it doesn't matter what the wave count is because they both say we're go lower. Okay. Bob, that inverse ETF comment was for you. Hope you don't mind. UVXY. Which one is that? I don't even track them really. UVXY. Pro shares, Ultra VIX, short-term futures. Okay, got it. Oh, those are the futures. That's not inverse. Ultra VIX, short-term futures ETF. Okay, it's an ETF on the futures. Got it. All right. I don't track it that much. I just don't. VIX breaking the new lows as the S&P is up in the highs. Kind of telling you the same thing that the S&P is, that volatility is low in here as the S&P is overbought. So, I don't have too much more for you than that. Let's take a look at Amazon, and then Don will roll into your Facebook. And okay. So here's Amazon, and kind of thought this was interesting, this chart pattern yesterday. Come on. There we go. Oh, we're open already. Oh, God. All right, real quickly on Amazon. We are into a pretty good zone of fib resistance here in Amazon. We have earnings coming up next week. And yesterday was a big old outside bar reversal. So the highs from yesterday were above the highs from the prior day. The lows from yesterday were below the lows of the prior day. So we did an outside reversal bar. So far, we have a pretty quiet inside bar forming here. And again, we're up against this 640 to 660 area of resistance. So I'm on guard for kind of a failure here in Amazon heading into earnings. Apple failed sharply at a very nice confluence of fib at around a 111 to 112. This is a zone we've been focusing on for a long period of time. This is a very likely a triangle in the works here in Apple. This was the zone 110 to 111. We pushed above. I'm thinking Apple has some lower prices to go again in this longer term wave 4 triangle that is sourced from the highs of 2015. So we could be moving lower in Apple, be looking for short setups there. Facebook, Don, I don't know what the heck's going on Facebook. I don't have a solid feel on this count. I don't know what this price pattern is. Here's what I'm tracking over here. It's I'm not even going to talk about it. It's a goofy pattern. I really don't know. It's kind of a corrective rally, 3-wave rally back to new highs. We sell off. I don't know what's going on with Facebook. So fortunately, I'm no help there. Let me take a look at Netflix. Let's take a look at Netflix. Let's just check my positions. Okay, pretty flat. Oh, we got out of APA yesterday. Those of you who are following along there, I'll swing over to Netflix here in a second. Apache, we took profits up into a wave 5 zone. This has been one of the strongest energy stocks. We haven't talked about crude oil. I have a big old butterfly going on now in crude oil. It's a range bound setup in USO. We have a 9, 10, 11 call butterfly going on in USO, which is a range bound Elliott Wave strategy for options. Apache is one of the strongest energy stocks out there. We do have a fib resistance zone. We bought them back here somewhere, got up into the fib zone, and is now gapping down. So Apache's looking lower, and crude oil is down a couple percent today. So down 1.5% today. So that's adding to my feeling that the S&P and overall market is starting to move into resistance. Crude oil upside leadership has been lost. Netflix down 1.08% today. Let me take a look at that, and then we will finish on Netflix. Oh yeah, Netflix is certainly heading lower. I'm not even keeping up with my Facebook count. That's pretty bad. Or my Netflix count. I mean, pretty simple. Just looks like a retracement back into the 50 to 618 retracement. Certainly nowhere near as strong as the overall NASDAQ. We're right to the 61% retracement, starting to move down. If you break the 786 of the corrective rally, which would be at $85, then Netflix is in big trouble. But I think in the near term, you want to try to get down to the $90 level and then see if you can get down to 85. But Netflix looks lower as well. Okay, but again, that's the key, 786. If you break through that, then there's a decent shot you get down to the 1272, and that's going to take you through the 2015 lows, and that's not good. Okay, if you guys would like to, any of you who are not members of Trading Analysis, this is my website again. I can give you a quick little link if you want to take a 7-day trial or a 30-day trial. Off the website, they're normally $47, but if you would like to take a trial to our research services, our SMS alerts, the whole package, you could just go to tradinganalysis.com/motivate for MotiveWave. Okay, tradinganalysis.com/motivate, and that will bring you to a checkout page right here for $7, and you get 30-day trial. All right, so that's the offer. If you'd like to join us, I'm going to go to work with the research customers here. Notepad. And again, if you'd like to get involved, it is tradinganalysis.com/MOTIVATE. All right, guys, hope that helps. And I hope you picked up a thing or two. And we'll catch you guys in the trial here in the members area. Or if not, you got to wait till next week. So thanks, everyone. And we'll talk to you then.